Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact your stock and bond portfolios. I'm Scott Nasca, President of Generation Capital Management. Tough week last week for stock markets as all three major indices were lower. We had the Dow Jones down 1.9%, S&P 500 down 2.9%, and the NASDAQ was down 3.6%. So this continues to be a tough month for September as we've seen the markets really give back a good amount of the gains that have taken place so far in Q3. So we want to see if this is going to be anything that has legs to it or if it's something that just short term, people taking a breather before going into the fourth quarter and holiday season. In regards to the bond market, we have the 2-year at 5.13% and the 10-year at 4.60%. 63 basis point inversion still taking place where the short end of the market is higher than the longer end. It's been something that's been going on for the past 18 months. As I've mentioned in previous sessions, this usually leads to economic slowdowns or recessions if history's any guide. An inversion this wide of 63 basis points is pretty daunting in terms of historically how it's been. For it not to show any economic weakness or recessions will be quite a surprise, and it's something the markets aren't factoring in at this time. We have a lot of data points coming out this week. We have consumer confidence on Tuesday, building permits coming out on Tuesday as well. Q2 GDP data is on Thursday. We have Fed Chair Powell speaking on Thursday, so pay attention to what he has to say. And also we have the August PCE inflation data coming out on Friday. Any inflation numbers that are released are important. Keep an eye out for those. It's something that the Fed does pay attention to, and PC is one of the gauges that they look at closely to give an idea in terms of how interest rates are going to fare, especially over the next few months. They did have their meeting last week for September, and they put interest rates on a pause right now. Still forecasting another rate hike at the end of this year, but we'll wait and see if the data changes that. Data has come out a little bit stronger over the past couple months, so it's a tough situation right now. The Fed is in terms of trying to manage this inflation that's out there with interest rate policy. So just keep an eye out for that. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Our team's ready to answer any questions that you might have. Give your portfolios a second opinion. Just make sure your allocations are aligned with your risk tolerances and your goals and objectives. We have a lot of good topics on our website you can take a look at, whether it be through financial planning or investment management. But just feel free to reach out to us. We're glad to help out any way we can. Once again, my name is Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.